Welcome to our channel. In this video, we are going to talk about future of Bitcoin. So before starting, please like this video, and subscribe to our channel for future updates. The year 2021 will be remembered as a watershed moment for cryptocurrency. But what comes after that? Bitcoin has witnessed a new all-time high price, regulatory conversations with the potential to have a significant impact on the sector, and increased institutional buy-in from major corporations. Meanwhile, interest in cryptocurrency has soared this year, making it a popular topic not only among investors but also in popular culture, owing to everyone from longtime investors like Elon Musk to that kid from high school on Facebook. According to Dave Abner, head of global development at Gemini, a renowned cryptocurrency exchange, the first half of 2021 was a breakthrough in many aspects. The crypto business is receiving a lot of attention and interest. However, the sector is still in its early stages and is continually changing. It's tough to forecast where things will go in the long run, but experts will be watching issues like regulation and institutional acceptance of crypto payments in the next months to get a clearer feel of the market. While it's tough to make exact predictions, we asked 5 experts what they're watching in the crypto world for the remainder of 2021. Regulation of cryptocurrencies. Expect to hear more about Bitcoin legislation in the future. Lawmakers in Washington, D.C., and around the world are trying to find out how to make cryptocurrency safer for investors and less appealing to hackers by enacting regulations and guidelines. One of the major overhangs in the crypto business globally is regulation, says Jeffrey Wang, president of the Americas at Amber Group, a crypto financing firm based in Canada. We would greatly appreciate unambiguous regulation. China declared all cryptocurrency transactions illegal in the country in September, thereby putting a stop to any crypto-related activities within its borders. Things are less obvious in the United States. Chairman of the Federal Reserve, Jerome Powell, has stated that he has no intention of outlawing cryptocurrency in the United States, while SEC Chairman Gary Gensler has continuously stated his agency's and the Commodity Futures Trading Commission's roles in policing the market. Investors are likely to be hurt if stronger regulation is not implemented, according to Gensler. Furthermore, the IRS has a vested interest in ensuring that investors understand how to report virtual currency on their tax returns. Regulation, like most things in Bitcoin, is fraught with difficulties. Wang explains, there are various agencies that may or may not have jurisdiction to monitor anything. And it varies from state to state. Clear legislation would remove a major obstacle for Bitcoin, according to Wang, because U.S. enterprises and investors are now operating without clear restrictions. What the new regulation may imply for investors. Recently proposed legislation could make it easier for the IRS to track down examples of crypto tax avoidance. However, investors should already maintain track of any capital gains or losses on their crypto holdings. However, the new laws may make it easier for investors to disclose cryptocurrency transactions correctly. In already unpredictable markets, regulatory news can have an impact on the price of cryptocurrencies. Because of market volatility, investing professionals advise keeping cryptocurrency investments to less than 5% of your whole portfolio and never investing money you can't afford to lose. In the end, many experts agree that regulation is beneficial to the sector. Ben Weiss, CEO and creator of CoinFlip, a cryptocurrency buying platform, and crypto ATM network adds, sensible regulation is a win for everyone. It gives people greater trust in cryptocurrency, but we believe we need to take our time and get it right. What a cryptocurrency exchange-traded fund, ETF, might imply for investors. Crypto ETFs are not currently available in the United States, but if they are, more Americans will be able to invest in and influence the cryptocurrency market. You may add crypto to your portfolio straight from the same brokerage with which you already have a retirement or other traditional investment account, rather than learning how to navigate a cryptocurrency exchange to trade your digital assets. Investing in a crypto ETF, on the other hand, carries the same risk as any other crypto investment because it's a portfolio of assets that are only diversified by multiple cryptocurrencies, all of which are speculative and volatile. If you're not prepared to risk losing money by buying crypto on an exchange or investing in a crypto fund, you should seriously consider whether you're willing to risk having cryptocurrency in your portfolio at all. The future of Bitcoin. Because Bitcoin is the largest cryptocurrency by market value, and the rest of the market tends to follow its patterns, it is a good predictor of the crypto market in general. Bitcoin's price has gone from a peak of $60,000 in April to a low of less than $30,000 as recently as July 2021. Bitcoin has just surged back toward $50,000. Because of this volatility, experts recommend that you limit your crypto investments to less than 5% of your overall portfolio at first. But how far can Bitcoin rise? According to Kiana Daniel, author of Cryptocurrency Investing for Dummies, Bitcoin's background may hold some insights. Since 2011, Daniel claims that Bitcoin's price has experienced numerous massive rises followed by pullbacks. I anticipate short-term volatility and long-term growth from Bitcoin. Others are more optimistic about Bitcoin's short-term rise. The price of Bitcoin, according to Bill Noble, chief technical analyst at Token Metrics, a cryptocurrency analytics platform, will continue to rise for the rest of the year. I believe Bitcoin will go to $75,000 rather than $25,000, he says. What the price volatility of Bitcoin means for investors. The volatility of Bitcoin is yet another reason for investors to stick to a long-term strategy. If you're buying for long-term growth, don't be concerned with short-term fluctuations. The best thing you can do is, set it and forget it, when it comes to your cryptocurrency investment. Emotional reactions can force investors to act rashly and make judgments that result in losses on their investment, as experts continue to warn us every time there is a market movement, whether up or down. Broader institutional cryptocurrency adoption. In 2021, mainstream companies from a variety of industries have expressed interest in cryptocurrency and blockchain, and have even invested in it. AMC, for example, just announced that before the end of the year, it will be able to take Bitcoin payments. PayPal and Square, for example, are banking on cryptocurrency by allowing consumers to buy it on their platforms. Tesla continues to waver on whether or not it will accept Bitcoin payments, although the firm owns billions in cryptocurrency. Experts expect that this type of buy-in will become more common. Some analysts believe that in the second half of this year, larger, worldwide organizations will accelerate adoption even further. Weiss says, what we're looking at is institutions getting involved in crypto, whether it's Amazon or the large banks. Amazon, as a large store, may start a chain reaction of others accepting it, as well as give a lot of legitimacy. Indeed, by publicizing a job advertisement for a digital currency and blockchain product lead, Amazon has recently prompted rumors that it is moving in that direction. Walmart is also looking for a blockchain expert to supervise its strategy. What more institutional adoption means for investors. While most individuals don't see the value in paying for products with cryptocurrency right now, more merchants taking payments could change the scene in the future. It will likely be a long time before spending Bitcoin on products or services is a wise financial decision, but more institutional acceptance could open up more use cases for common people, affecting crypto pricing. Nothing is sure, but if you acquire cryptocurrencies as a long-term store of wealth, the more real-world applications it has, the higher the demand and value will be. Cryptocurrency in the future. We can guess, and many wills, what value Bitcoin will have for investors in the future months and years, but the reality is that it's still a new and speculative investment with a little history on which to make predictions. No one knows what a particular expert believes or says. That's why, for long-term wealth accumulation, you should only invest what you're willing to lose and stick to more traditional assets. So that's it for today. What do you think of our video? Let us know your thoughts in the comments below. If you enjoyed this video and would like to hear more from us, please subscribe to our channel and turn on notifications before you go. Thank you so much for watching us.